Making sense of the overwhelming wave of information means cutting through the noise to shine a light on the heart of the story and making room for new perspectives. True understanding means the ability to see events from more than one side. I'm Liu Xin, and this is The Point.
The S&P Dow Jones Indices recently announced it would remove 21 Chinese companies from its global stock and bond benchmarks. This follows a similar move by the FTSE Russell Index and the Trump administration's ban on the purchase and owning of some Chinese securities by U.S. investors. In response, Chinese Foreign Ministry spokesperson Hua Chunying said this was another example of the abuse of national security excuse and would ultimately hurt American interests. Did the S&P have any option other than to follow the new U.S. regulations? And how will the delisting affect international investors and other Chinese companies? Joining me today via Skype, David Blair, Vice President and Senior Economist at the Center for China and Globalization. Here in the studio with me, Professor Gong of the University of International Business and Economics. Gentlemen, great to have you on the show today. So first of all, here's what we know. S&P Index announced it would drop 10 Chinese companies prior to the open on December 21st this year, including Hikvision and SMIC, with the rest being removed prior to the open on January 1st next year. The action follows a Trump administration ban on U.S. investors buying or owning stock in certain Chinese companies accused of ties to the Chinese military. The S&P said the decision only includes fixed income securities issued by the entities explicitly named in the executive order, not any affiliated company. That is a mouthful and a lot of jargon in there. Professor Gong, can I get your thoughts on what this actually means? Explain a little bit to our viewers what this means.
Well, officially it's called delisting, but actually it's not delisting. What it says is that these companies will not be included in the indexes that these two companies have been put on the market. What it means is that the companies, the mutual funds in the United States that are index funds that are buying securities based on these indices will have to sell, or they are not allowed to, they're not going to buy these Chinese companies in the future. So, but I think it's not going to have a major impact on these companies, on these stocks, because the investment funds from U.S.-based mutual funds is not a very large portion of the total market capitalization of these companies. Second, I think it doesn't have much impact on these companies because these companies have already gone IPO, they've already been listed, and it's just affecting the secondary market. And I think finally it would have an impact on future listing and IPO of Chinese companies in U.S. stock exchanges. I think Chinese companies will think.
Hold that thought on impact. We'll talk more as we go on. And Mr. Blair, first of all, your thoughts on this latest action, which obviously is a follow-up of the Trump executive order. What does it mean? And in particular, did S&P have a choice here? Does it have an option?
Well, no. The S&P and other index companies did not have a legal option. When the administration prohibited U.S. citizens from buying the stock or the debt from these companies, that means that if an index included these stocks, American citizens could not buy any mutual funds or other funds based on that index. And index funds are about 50% of the value of the U.S. stock market. So these companies would be losing most of their business and their reason for existing if that happened. But I do want to point out that we shouldn't exaggerate the importance of this particular event. According to the South China Morning Post, there are 2,009 Chinese companies included in the S&P's largest global index. This order affects only 31 out of that 2,009. So it's not a direct move against many Chinese companies. Let's not exaggerate the importance of it.
You heard my other guest, Professor Gong, now, who said not only will this have a significant impact on the Chinese companies involved, very few American investors will be impacted by this also. Do you agree?
Yeah, I mean, foreign ownership of A shares it's growing, but it's still only 4 to 5% of the total A share market. And these 31 companies are a very small portion of that 4 or 5%. So these measures are largely symbolic, but symbolism does matter. I'm much more worried that this is just one more measure in a series of measures that are leading to rising tensions between the two countries. And this kind of animosity between the two countries is very dangerous and I think largely unnecessary.
Rising tensions that have now spilled to financial ties between Beijing and Washington. Professor Gong, you want to add to that point?
Well, I think these are the things pretty much expected. These are the things that President Trump would like to do before he's going to be kicked out of the White House. We would expect that he would do something like this. I think he was very revengeful after losing this election, and he thinks that it's all China's fault, and he's taking this anger on those Chinese companies. So I still want to talk about the long-term impact. I think
yes, please go ahead.
Chinese companies being listed on New York Stock Exchanges and other exchanges in the United States is not just a one-way street. I mean, for every transaction, there got to be a gain from this trade from both sides. For both sides, it is the American investors that are also benefiting a lot from Chinese companies listing on the stock exchanges in the United States. There's actually a little study that shows that the current market capitalization compared to the initial public value when these companies went public in the United States, it was like 10 times market cap increase. That means that the investors who initially bought into these stocks have a gain of 10 times. That's a very significant amount, and certainly it benefits American investors and it benefits American economy, and also very much benefits the Wall Street, the financial industry in the United States. So I just don't comprehend why President Trump. Well, I can understand why he does that, but I don't think that it's in the United States' interest to do this over the long run.
Symbolism.
I think it's just knee-jerk reaction before kicking out of office, and I hope that the new Biden administration would adopt options, would adopt measures to mitigate the damage this president is leaving behind, and I think good things will happen as January 20th comes.
Mr. Blair, just to follow up on the point you made just now, the significance of this action should not be exaggerated. Is it, for the Chinese side, for Beijing, should there be countermeasures of any sort?
I want to push back on the idea that it's just President Trump who is pushing for this kind of thing. Just last week, the Democrat-controlled U.S. House of Representatives unanimously passed a bill to kick Chinese companies off the U.S. stock exchanges if they don't fully comply with U.S. generally accepted accounting principles. This, again, I don't think this matters much because Chinese companies really are not dependent on the U.S. market for capital. China has plenty of capital, but again, the symbolism is very bad, and I think the optimism in China that the Biden administration is going to be a lot better in terms of dealing with is probably misplaced. My reading is the Biden administration might be a bit easier to deal with in economic terms, but looking at the Obama administration during the pivot to Asia, it may be more difficult to deal with in military terms. So I'm worried and pessimistic about the future of the relations.
I don't think we have time to play what we have from the Chinese Foreign Ministry spokesperson, but in a nutshell, she thinks that time will tell that it is the interests of the U.S. side that will be hurt at the end of the day because of the U.S. encircling and containing of Chinese enterprises with various excuses and without a bottom line. Professor Gong, do you think that this warrants a countermeasure, more actions from Beijing? Because the Chinese the capital market back home is always embracing those Chinese companies that were previously listed on the U.S. stock market. Should there be more support from the government side of Chinese companies, or this is too insignificant for Beijing to act?
I think from a substance point of view, it's not very significant. But I'm a little bit concerned about the prospect of retaliation causing escalation of retaliation. It's quite likely that the Trump administration would just ramp up. He has a history of doubling things down.
Professor, I'm sorry to cut you off. We're running out of time here. We hope to have both of you back for another session to talk about this. And that is the point today. I'm Zhong Shi in Beijing. We thank you for the privilege of your time.